Hey, good morning, everybody. So I thought this would be a great opportunity for me to review a winning trade that I took today, and then another one that's a really good example as to what I was talking about last night about theta burn. So a couple things you're going to learn with me with the charts is we always look left, and we always look at where was there resistance in the market. So you'll see here on the left-hand side, the blue is a post-market close. The brown is a pre-market open. So this was from over a day ago, but you'll see that SPY got up, rejected, came up again, rejected, and then yesterday moved up on the open, and then yesterday was just a pure down day. So again, we always look left. This was yesterday after the market close. This was today before the market opened. And before the market opened, there were bank earnings. The market literally went up in a straight line, right? Back to these prior rejects that pushed down. So what I did today is I waited for the market to come up to this high, look for failure, and then got into puts. So I was able to get into my put contract at $83 a contract, wrote it down, and then I got out at $125. So I made $42 per contract. I did have some size on this trade because I really liked it from an overall VWAP and some other indicators that I'm not showing you right now, just to keep it simplistic. But what I really want you to think about and start wrapping your head around is that the market isn't sporadic, right? It's very practical. So when you think about the fact that there is supply and demand, so overall within the market, if we go ahead and take a look at, well, where was their supply? And I was kind of showing this last night. This is where the supply is sitting. This is where it has rejected 1, 2, and we came up to it again. We watched for price action. I waited for the consolidation and then the candle to break below. We come up, we retest, and we flush. And that was a winning trade. And all I needed was one trade today. I actually took two. I shouldn't have, but I couldn't resist the setup. Okay? So now, had I rode this the entire way down, that trade would have gone 3x. I got out with a 50% profit. I thought good enough, and I didn't expect it to continue free falling considering how far we came up. So if you also then take a look at, well, where did we start to bounce on this trade? Well, again, we're going to take a look left and see what the market is showing us. So we're going to look at actual demand. Where have you had demand? Well, again, looking left, we're going to see that we came down, we bounced up. So this is an area where the market has been consistently showing some overall demand, okay? Right around the 476 level and 475.95, so pretty narrow. We came up, we broke below it, we flushed, we came up, we moved down, we come up, we move down, we get above it, and then we use it as support. And then it was kind of hovering around here. So what this will show you is there's a lot of activity in this zone with buyers and sellers. You'll also see the pre-market, we moved up, we pushed down to this same zone all the way up. We come down, and again, the market respects where the buyers and sellers are sitting. Now, software will help you identify this, but I just drew it so that you can see that with the naked eye, it's very attainable to draw these price levels. And you'll learn it over time, and I'm going to do an entire class on it. But the one thing I want to do right now is I would not get long the market until we can build some consolidation here and start to show that we are going to surpass this prior consolidation here. So I wouldn't want to get long until we get above 476.79 with some strength, knowing that potentially we could have another round of consolidation right in that same area. And then my next target for a move up would be the prior area of breakdown. So I would get above 476.79 with some strength, and I would take it up to 477.40. But I want to talk about theta. So this is a great example from last night where I was talking about contracts and contract burn, and it's not doing what you want it to do. Well, here's a perfect example, and I'm going to go ahead and just color this area right here where you can see that there is virtually no movement in the overall price of the stock. Okay, so this is your first candle open at 838. So you have one or two options. You're going to play for calls or you're going to play for puts. Well, if you look back to my levels that I had, there really was nothing to go off of. You do have some support right about here where the market bounced and came up, but we don't yet have enough strength to get above this prior high. And then the next break below is going to be somewhere right about here where you can see we bounced up, we found support. So are we going to flush it? So I would not go short until we can get back below this area of prior support. And again, this will make more sense as we spend time together. But if you got in the contracts at, just remove this line if I could. If you got in the contracts at 8:38 in the morning and you bought calls or you bought puts, it went from 8:38 and then these are 1 minutes. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I mean, you literally went from 8:38 all the way to 9:14. You went almost 40 minutes with no price movement. The market didn't go up, it didn't go down, it kind of settled, which also shows why I don't trade outside of the first 2 hours. There's just not enough volatility and momentum. Now we're grinding higher, but that's not a reason to take a trade. So what would have happened is if you got into calls here and then just watch this happen, or you got into puts here and watch this happen, whatever you paid for this contract, it's going to be less by the time you get here. It's going to be even less by here and even less by here. So if a trade isn't playing out within typically 5 to 10 minutes and it's just consolidating in this zone, building a base, this is where you would just cut the trade and say there's going to be too much theta burn. Okay. Now there's some other things that we could look at that I'll teach you as we move forward with exponential moving averages and overall VWAP, which is volume weighted average price, that will start to make more sense. But right now we are trending below what people are willing to pay for the actual options contracts. We have this huge area of consolidation and not much of a breakout. So this is a great example right here of theta burn, where we would have just probably 5-7 minutes in, we would have just cut the contracts and said, I'm out of the trade. So hopefully that helps. This makes a little bit of sense. And if it doesn't, don't worry. We got plenty of time, 4 more sessions together, at least 8 hours, where I'm going to do nothing other than talk about charts, candlesticks, indicators, volume, and price action. I just thought it was a really good analogy as to a couple things that happened today that I wanted to share. So with that, have a phenomenal weekend, and I can't wait to talk to you guys on Tuesday. Take care.